Tensions bubbling over trade, Mexico striking back with tariffs on a host of American-made products following President Trump's tariffs on steel and aluminum. The retaliatory measures out of Mexico include a 25% import tariff on a range of steel products, 20% on pork products, 20 to 25% duties on cheeses, and a 25% duty on bourbon. Council of Economic Advisors Chairman Kevin Hassett addressed concerns of a trade war impacting America's economy just yesterday.
Our trade deals are very asymmetric, that our markets are really open to the imports from other countries, but a lot of other countries have asymmetric treatment of us. The president's objective is to get fully reciprocal trade deals. And if you model a future where everybody else reduces their trade barriers to ours, then that's massively good for the global economy and massively good for the U.S. economy.
Joining us now is the CEO of the American Petroleum Institute, Gerard. Jack, good to see you. Thanks so much for joining us.
Thank you, Maria. It's always good to visit with you.
So the U.S. exports the majority of its oil to Mexico and Canada. How will these tariffs impact the oil and gas industry?
Well, Maria, we're very concerned that we haven't looked at energy in its true context. And what I mean by that is we understand what the president's trying to do in terms of the broader discussions, Mexico, Canada, China, and elsewhere. But fundamentally, from an energy perspective, under NAFTA, we've had open border trade policy for many years. We're significantly net exporters to Mexico. In fact, a lot of people don't realize we import a fair amount of Mexican crude that comes to Houston, to the U.S., employing American workers, where we refine it and turn around and send it right back to Mexico as refined product or as gasoline. So we're very concerned that what we've now entered into could disrupt, if you will, the equilibrium, the balance we've achieved in energy trade. So we would hope they would think clearly and specifically about energy and what this means for energy as the president's trying to accomplish his broader purposes. So
as the industry's, national trade group, the trade association with, 625 members, you're representing from large companies to smaller companies in the oil industry. What will be their reaction? Will the oil companies be forced to raise prices?
Well, what happens in this case, Maria, is you create a great deal of uncertainty. Let me just give you one simple example a lot of people might not think about. When you start imposing tariffs, quotas, or just sanctions, if you will, on other nations, you come to a point where, think about right now, we just did a recent study that shows 77% of our line pipe, what we use in infrastructure in this country, is imported. Now, for whatever reason, it's been brought in for many years from outside this country. But think of all that's on ships today coming to the United States. Right. All of a sudden, we're told we've increased the cost of that 25%, or we're told there's been a quota imposed, and by the way, you've already reached your quota.
Right.
So you see the disruption, the uncertainty it creates in the marketplace. That's not good for us, because then we tend to get conservative in our investments in creating American jobs, producing American energy.
And the U.S. government has reportedly asked Saudi Arabia and other OPEC members to increase oil output by roughly 1 million barrels a day. Yeah. I'm sorry?
I say, how amazing is that?
Right. So this is a really rare request coming as gas prices are on the rise. Obviously, if they want to raise output across the world, that tells you that they're trying to offset potential price increases.
Well, absolutely. And unfortunately, we need to be focused on the U.S. We are now the world's largest producer of oil and natural gas in this country. No one would have thought that possible just 10 years ago, but we've achieved that. And we did it on the basis of free market principles, able to bring in products, supply chains that are very complicated, sophisticated around the world. We need to continue that effort in order to benefit Americans, particularly American consumers.
All right, we will see about all of this. Some of it, I think, is probably leverage that the president is using to hit back at China. But this is all still in development stages. Jack will be watching the impact. Thanks so much for weighing in.
Thank you, Maria. Always good to visit with you.
And to you, Jack Gerard, joining us there, American Petroleum Institute.